Our next presenter is Stephen Simmons. Stephen Simmons was a research analyst at Tudor Investment Corporation, where he built and managed trading systems with tens of millions in assets under management. Later, he was CTO at AG Squared, Director of Technology at Ideal Lab, then American Towns. So, with more than 30 years of success, he's a veteran in the worlds of quantitative finance and internet technology. Now, the founder and CEO of WaveBasis and the platform's oldest active customer, Stephen is on a dedicated mission to advance the science of Elliott Wave analysis and serve the Elliott Wave community with the best tools possible. Over to you, Stephen.
Okay, everybody, thanks for coming, to all the attendees. I'm Stephen Simmons, as Jody just introduced me. Today we're going to talk about WaveBasis, and we're going to do something a little different than I've done before, but let's just jump right in. First, a little bit of introduction in case there are people here who haven't heard about WaveBasis or don't know what it is. As you can see here, it's an Elliott Wave charting platform with rich automation features. The platform itself is data-driven, and the tools and the features embedded in the platform are very much focused on probabilities. We've analyzed thousands of markets, and we've seen hundreds of millions of wave counts, and essentially through that research and work have confirmed Elliott's original observations. We'll talk a little bit about those observations in a minute. Who should use WaveBasis? Basically anybody who has an interest in Elliott Wave analysis, trading. Beginners can learn practical Elliott Wave analysis by using the tools and going through the documentation and other help stuff on our website and blog. And experts can use WaveBasis to apply Elliott Wave analysis faster and better, more precise. And I've just listed here some of the features that you can find on the platform. But we offer, and I'll talk more about this later, we offer a 14-day free trial. So you're always welcome to see the features for yourself. Why did I build WaveBasis? From my old days, as Jody mentioned, working at Tudor Investment Corp, I knew that Paul Jones relied heavily on Elliott Wave analysis. So that was my first exposure. Then into 2014, flash forward, I saw some Elliott Wave analysis producing amazing market forecasts. And actually, I should mention, I haven't mentioned this before, and I feel remiss in not mentioning that. In fact, Zach, who just spoke, and Avi were part of my early inspiration. I saw these guys doing amazing work, and they're still doing it. And at that time, I was having a background as a computer science engineer. My first natural thought was, well, I first was exposed to Elliott Wave analysis in the early 90s, late 80s, early 90s. Surely by now, 2014, somebody will have automated this because it is it's a time-consuming and tedious process to label Elliott Wave counts yourself, as a lot of people here probably already know. So I went looking for a way to find out if somebody had already automated the process. And I didn't find anything that met what I was looking for. So I decided to do some work at the time as a pet project on the side, trying to come up with algorithms, trying to come up with a more automated way to produce, more automated and reliable and faster and all of that way to produce valid and solid high probability Elliott Wave counts. So through that, I've approached Elliott Wave theory as a science, and actually traded with WaveBasis for 2 years before it was actually released as a publicly available product. The goal is to make Elliott Wave faster, easier, and more objective, and therefore more effective and reliable to empower individual traders with pro-caliber Elliott Wave tools and market insight. So here we are. We'll look at some of the features assuming we have time when I get through the sort of meat of what I wanted to talk about today. A little bit of the background and context to my approach to Elliott Wave trading, which is sort of flavored the software itself. And I like to reinforce these ideas at the beginning of a presentation like this, because I think it's important to orient yourself as a trader and as an Elliott Wave trader in particular to really internalize what it is you're doing. And Zach touched on this, the first point here. So I call it a reality-based Elliott Wave philosophy. Human sentiment drives markets. If enough people think a market is going to go up, it goes up. That's how markets work. And if you are looking at a chart, it might seem like you're trying to predict something external. Like maybe you're trying to predict what's going to happen, where the ball is going to land in a roulette wheel, for example. The reality is that it's not something that's external. What you're actually seeing when you're looking at a chart are the ups and downs of the sentiment of the people who are participating in the market. So it's not something external. And even further, that crowd of people includes you. You're part of this group of people who are expressing their sentiment through buying and selling of a particular asset. So, as I said, if you and enough people think the same way or feel the same way you do, the market's going to go in that direction. That's just a simple fact. So Ralph Nelson Elliott observed that sentiment moves in cyclical and repeating patterns, and this aligns with everything else in the universe. There's nothing that escapes the patterns of the universe. And things, obviously, that move in patterns can be predicted. It's a really simple idea, but I like to reinforce it because, as I said, when you understand what you're doing, you have a better chance of being successful at doing it. And the Elliott Wave framework simply provides a mechanism for measuring these patterns of sentiment that we know are operational in the market. As I mentioned, I touched on the roulette wheel example. So what you're doing is not trying to predict some random thing. It's not a game of chance you're playing as a trader, particularly as an Elliott Wave trader. What you're measuring and tracking is a dynamic real-world phenomenon. Crowds of people expressing sentiment. So with all of this in mind, it provides a strong rational basis for Elliott Wave analysis itself, which has driven the work that I've been doing, that we've been doing. My approach is pure Elliott Wave with RSI, MACD, and volume for confirmation. And there are lots of other, and Zach touched on some of these, lots of other indicators and sources of information about or perspectives and techniques to look at what's happening in a market that can be combined with Elliott Wave analysis to suit your taste. I rely heavily on market context for guidance, and there's a strong focus on probability. You'll probably hear me say the word probability lots of times during this talk. Price levels and price structure. So let's see. One other thing I'll mention, this idea of predicting patterns of human sentiment. We have plenty of obvious examples of crowd sentiment moving in cycles in our real world and in our day-to-day life, from geopolitical cycles, and social media platforms use this kind of information to anything related to marketing, advertising. Google has built an empire based on predicting patterns of human behavior, and fortunes have been made using Elliott Wave analysis to predict patterns of human behavior. So again, strong rational basis for what we're doing here today. Okay, what are we going to talk about today? As I said, I'm going to do something a little different. I'm going to present a case study that might be kind of long. We'll see how it goes, of planning and executing a counter trend trade in Nasdaq futures. Then I'm going to, depending on how much time we have, look at some long-term charts. And through this talk, we will cover concepts like wave count tracking over time, providing market context, evaluating wave counts, and using WaveBasis pattern projections to help do that, using Elliott Wave probabilities effectively, anticipating a rally reversal as a specific thing that we're going to look at, and coherent analysis across multiple timeframes. And then we'll have some questions and answers at the end. So I encourage you guys to put your questions in the chat we'll be gathering those questions and looking at them toward the end of the hour here. So a big part of the goal, my goal today, is to provide some insight into the thought process that goes into this particular trade that I'm going to look at, that is counter trend trade in Nasdaq futures. And it's actually really kind of cool that the timing today, timing of this example couldn't be more perfect, because it looks like we're having the biggest one-day drop in Nasdaq so far this year. So that's great timing. The Elliott Wave gods are smiling on us. So with that, let's jump to the case study. Now, first, a little bit of the context for this. A close friend and colleague of mine, somebody that we've traded together before, has just recently started getting into day trading, formalized day trading, where he's out at the close, out at the regular session close. And he's been focusing on Nasdaq futures. He came to me, what we're going to look at is the actual conversation between us over the course of the last, three, almost 4 weeks. He came to me in January and he was telling me what he was up to, and he was actually thinking about getting short the Nasdaq. And at the time, I wasn't really focusing on the Nasdaq. I haven't actually been doing a lot of up close market analysis lately, because we have some big stuff happening at WaveBasis. That is always going to be my first priority. And I'll just say we have a juicy release coming up sometime in the next week or so. Lots of improvements, optimizations, things like that. So I'm really excited about that, and several planned releases coming up over the course of the next weeks and months. So he started looking for a short in Nasdaq, and I thought, well, let me take a quick look. And he asked me if I had any comments. So I took a quick look, and the first thing I said, well, what's your long-term in trying to find this kind of trade when you're looking for a reversal after a long move? First thing you need to do is determine your larger time frame context. And what we're seeing, the format of this document, I'll just mention, you'll see these funny looking links above the chat areas with the charts. Each of these links is a shared chart. You can share charts from within WaveBasis. And this document, we'll make this document available on our website, PDF or something. So you'll be able to retrieve all of the actual charts that I was sharing with him. So over the course of these few weeks, I was sharing charts and putting out comments, and we were talking about all sorts of other things in between, but I've trimmed this down to just the Nasdaq talk. So let's look at the first chart here, and we'll come back to this longer term chart toward the end of this. So this is a chart. I ran this wave count in WaveBasis just to get a quick sense of where we were. And I told him, as we can go back, I've never presented this before, so excuse me if I'm a little bit awkward flipping between the charts and the conversation here. And I told him to look at where are we in terms of the Elliott Wave channel. So I can't quite get to my tabs. 1 second. There. So what I could see here just in a few seconds after running this wave count, this is an automatic wave count that I ran back at that time. This is around January 22nd. I could see here, this gray box here signifies the highest probability place for, if we're counting this as a 1, 2, 3, 4, 5, the highest probability spot for wave 5 to end. And as we can see, we're a little bit over that area. And this channel here is just a standard Elliott Wave channel. And we can see not only are we extended beyond where we would typically expect reversal to begin, but we're quite near the top of the channel, which is another indication that perhaps a reversal is due. Another thing we can see on this chart is we're at around the 3.618 extension for this higher degree orange wave 3 up here. which is a quite extended wave 3, but it's not atypical for a wave 3 that is subdivided. We'll talk more about that in a minute. I won't talk too much about the long term until the end. I'm going to focus on how we arrived at a reversal. And it was also, actually, this is the second chart I sent. I decided to take a quick look at that. And I'll stay away from the long-term chart. Again, like I said, we'll come back to that. So seeing that chart and then looking a little bit more closely at the, let's call it, at the time, I was going to assume it was the last 5 that we had. Look at this. We were kind of short of where we would have expected wave 3 on a 15-minute chart. Again, we'll look at this again later. So what I told him was, well, based on the longer term chart, we've got a train that's running here as an expected wave 3 this is from the October 2022 low. If you're thinking about getting short, you better look for some confirmation first. So, and that is, again, we're sketching out a plan. We're a little bit short of where we would expect a downside reversal. So the probability is low that we're going to get it right now. I said here, it appears we're in a raging wave 3, so selling into it would seem to be a bad idea, probability speaking, at least until we get into the target zone. So I sort of cooled him off from pulling the trigger on an emotional short, and we let it sit for, I don't know, a few days, a week. As I said, and trading into a wave 3, in my opinion, because of the nature of probabilities, is best done with some strong downside confirmation, like on the pullback after 5 waves down on a 60-minute to 1-day chart. This is just, sort of thoughts off the top of my head, just general rules of, general guidelines of, the thought process of getting into this type of trade. He didn't quite understand what I meant there, so I sketched it out for him. So, and this is the sketch. I said, what you're looking for, if you're looking to get short a bull run like this, what you're going to look for is a 5-wave move down and a pullback. And I didn't draw it on here, but what you're typically going to look for an A, B, C pullback, and that would be sellable. And you can get the next. You're shooting for the next leg of the down move. 5 waves, 3 up, generally leads to 5 more down. That's the nature of the probabilities, and that's one of the beauties of Elliott Wave analysis. This gives you, after 5 waves and a 3-wave pullback, it gives you a high probability opportunity to trade with that first, and it's trade in the direction of that initial 5-wave move. Zach also touched on that. That's at the core of Elliott Wave analysis. So based on that, he decided to sit tight for a while. And then one day I looked at a chart. This is probably about a week later. Here we are on the dates here. This is January 25th, just a few days later. We start planning a trade. I happen to notice this little squiggle down on a 5-minute chart. Now, 5-minute chart is keep in the context here, I should say, I wouldn't call myself a scalper or a day trader. I'm more of largely because of my other time commitments, I tend to hold trades for days, weeks, months, or years. But if I see a scalp opportunity here and there, it just jumps out at me, I might take it. And this is what I see coming down. Sorry about that. Phone ringing. What I see coming down, looks like, I'm not sure exactly the date, it's around the 24th of January. A little drop here that looks like we have 3 and 4th wave. And I sent him this chart and I said, look, if this drops down again into this expected support area and we get that bounce, that might be one of the type of opportunity that we're looking for. And when you look at a chart like this, what I was doing, this was all spontaneous. I was just hoping to give him an example of what I had sketched out previously with by hand what I'd sketched out here, and I did this on a 60-minute short chart, which is going to give you a little bit more confidence than a 5-minute chart, but I wanted to show him what in real time what I was talking about. So I said, if we get this drop down here and this doesn't morph into something else on the downside, and you get a bounce up, that could be a sellable bounce. And sure enough, and this is, I'll touch on, again, we're always going to be focused on probability. We're establishing pattern-based expectations. And so what I should say about this chart is this isn't a prediction. This isn't something that I want to happen necessarily. It's focusing on the probabilities that are at work. This is saying, if this happens, then there's a high probability chance that you're going to get a good short trade here. I haven't expressed any opinion at all, just following the patterns as intended by Ralph Nelson Elliott himself. Excuse me. I can see this is going to take a lot longer than I expected. So I've established some pattern-based expectations. And one of the videos in our video tutorial section on the website is called Let the Market Come to You. And this is a great example of that. There's a temptation, I think, especially with newer traders or people who are newer using Elliott Wave analysis and using WaveBasis in particular, to run a wave count and see what it's saying and try to trade it immediately. So, okay, this wave count is telling me that we just topped in a wave 4, so we're probably going down to finish wave 5. Maybe I should get short here. We don't recommend that. I don't recommend that. What you want to do is establish some pattern expectations and then track it forward, with the underlying philosophy being in line with Elliott Wave analysis itself, is that once you see part of a standard or high probability pattern complete, the probability is higher that the rest of the pattern is going to complete. So again, we're just trying to align our thinking and our trading with the operative probabilities as suggested by Elliott Wave analysis, and as enhanced by these colored boxes that WaveBasis gives you to tell you where the high probability turning points are. And again, let the market come to you. So rather than trying to chase a move in here somehow, you're going to go and sit up here and wait for it. Wait for the market to come to you. That's one of the mental paradigm shifts of using Elliott Wave analysis that has really helped me over the years. And I should also mention that after we discussed this for a while, my friend actually took the chat and produced a document, and he said you can blame him if this presentation doesn't help you, but he assembled all this together into his own document and shared it with me, and said reviewing it really helped him get focused and understand the thought process. So I took his document and enhanced it to show you guys today. So hopefully it'll help some of you. So I sent him this chart. It says, speaking of 5-minute charts, this looks a little more like a viable candidate. So at that point, now we're watching. But I did note, but even on a well-structured 5-minute chart, it's wise to wait to see the same thing on a larger time frame chart, 15, 30, 60, etc. So what we did, so at this point, now we're in wait and see mode. We have planned our trade. If we see this, then we're supposing that we're going to short it up here at the top of an ABC bounce. I hope this is big enough on screens to see what I'm doing. So then we track it forward. So see what happened here. And what we're going to be looking for is, well, does the market confirm that hypothesis or that expectation, or does it do something different to let us know that we were wrong? And that is following your plan. So what happened is, we can see here, that original chart, maybe it's hard to tell, but that original chart was after this fourth wave bounce here. We were looking for the drop for 5 and then a bounce up for our short. And sure enough, we got the bounce. We had wave 5 completed down into that, or maybe just past that projected area down here. And it was projected around 17,610. Where did we get to? We got down to 570, spiked through, and started back up. And what we got was, a messy ABC that aligned with typical expectations. It's overlapping, it's ugly. And so we were sitting up here waiting. And so let's follow the plan. So I tell him this as, I'm not going to go through all of our chat back and forth here, but I'll just try to summarize it as we go. What I told him is this, I said it still could rally, but the probability of a drop looks pretty good. Strong, clear, impulsive move, followed by a jacked up overlapping move in the opposite direction equals Elliott Wave equals the whole game. That's it, 5-3. So trade your plan. So sure enough, we both, and at the time I wasn't, as I said, I wasn't really focused on trading at all, but he sucked me into this. I saw it, so I said, I'll take a trade here. So we entered it somewhere in here. This was actually a high wave 2, which I kind of like because I use pattern invalidation levels heavily in setting stop losses. So we got in here and we got a nice drop happening. So successful trade off the bat. And I told him, this was after we'd entered, and I showed him the chart, and here we are in a nice trade. Now, this is where I think some folks make a mistake. So now we're in the trade, and we should already, as I said here, your exit strategy should already be part of your plan. And for my friend in this moment, he hadn't thought about the exit. He hadn't thought about it seemed that he hadn't thought much about the targets we were shooting for. And he, as I think probably happens to a lot of folks when you get into a good trade, you're getting excited, and maybe you're thinking, oh, I should have made a bigger trade. This is going my way. FOMO jumps in. He says, he's all amped up and wanting to get on that third wave. So he's thinking about adding to the position, adding to the trade. And I said, whoa, wait a minute, too late. I said, the trade was up above. Now we're starting to, this is a scalp. We're starting to, not only because we're in this micro zone of a 5-minute chart, we have to remember the context. This trade, and I told him the trade was up above. Now it'd be time to take profits around the A equals C on the downside. I'll talk about that in a second. Don't forget the context. We're in a raging wave 3 to the upside. Don't forget that. There's the chart. We're here. This is a strong move. You don't want to count your chickens too soon, getting short something like this. This is why Elliott Wave, one of the reasons Elliott Wave analysis is so powerful, because it tells you the context, but you have to pay attention to the context. In a situation where we're already trending down, you might be a little more loose about trading short. But in a situation like this, you have to remember this is a dangerous place to be getting short for anybody. So what I'm saying here is, use Elliott Wave probabilities to your advantage. So as I told him, this is the time. Once we're in a good trade, don't mess it up by adding to it. Now we should be thinking about getting out, because if this, we don't know yet. We don't know that if this is going to happen. That we've gotten, we've nailed the top, and we're starting in a new intermediate term to trend or correction from that big rally. So if this is going to just be another correction, and the train is going to keep moving up, we're going to look for it to potentially stop at the A equals C. That's the 100% extension here. And even if we've gotten in up here and we're on a move that's going to keep moving in 5 waves, we're going to get a big bounce from here that on a scalp like this, you probably don't want to ride that bounce, or at least not without taking some profits. But in any case, this is not a great time to add to a position, because you're going to end, it looks like it's probably going to end around here. So I had to point that out to him. So this is, again, hopefully helpful for just the thought process that goes into this kind of trade. And I should mention, incidentally, though, that what we're looking at here is a 5-minute chart. But all of the same principles that we're discussing, that I'm trying to highlight here, are applicable at any time frame. That's the nature of Elliott Wave analysis. So, if you are newer traders, I don't recommend you try to do this on a 5-minute chart, because there's a lot of thinking that goes into this kind of analysis. Get some practice with larger time frame charts, but just as I said, the principles are exactly the same. You just don't have to think as fast. I think, and decide and move and execute as fast. So as I told him, we're going to need more proof to the downside before it gets juicy. And so I said, if this is going to continue going, rinse, repeat. It's going to, is it on that chart? Yeah. If this move is going to continue, we're going to do just the same thing we did here. We're going to wait for it to do 5 and then go again from up here. We're going to, again, let the market come to us. We're not going to chase it. My personal taste, especially when I'm busy doing other stuff, is I'm not going to mess around in here on a 5-minute chart. I'm just going to let it play out and see what happens. The move is the 5-3. I love 1-2s wherever you can find them, whether it's in a wave C or anywhere. And he said, yeah, and so he's got his head screwed on a little bit tighter now. He took some profits and we did well on that little trade. I said, yeah, as you can see, if this is a wave 3, then it's almost finished. And if the bears are in business, it's not going to get good until we see this. So sit tight. So some days go by. I'm not going to go through all of these charts. We watched this play out. We did get the bounce about from where we would have expected it to here. But I will point out that for me, when we got that bounce, did I show? I'm not sure. No, I didn't keep that chart in here. Hopefully you can see it on here. When we got the bounce, we got overlap with wave 1. The wave 1 stopped here. This penetrated that wave 1 into the territory of wave 1. So we got an overlap. So the best that we can hope for, if this is going to continue down in 5 waves, is that maybe it's a leading diagonal, or maybe it's some other corrective variant. And sure enough, as we move forward, you can, like I said, this will be on the website. You can see all my little ramblings in between. It did come down to complete that 5 waves down and started to bounce. So again, we're thinking that we're not thinking that this is going to happen. We're not hoping that it's going to happen necessarily. This is what needs to happen in order for us to consider a new short. The market, long story short, this did not happen. It got up in here on these starting out. Here's the 5s down. We can take a look at that one. This is the 5 down. This is the area that we were short in here. And then we started bouncing. But again, we had the overlap coming down, this overlap here, wave 4 overlap with wave 1. Then we got this strong move here. That's not characteristic of a typical wave C. It got really high. So I'm kind of nervous in here to take another short. It didn't meet the criteria. And again, remembering the context, we're in a strong wave 3. Caution is warranted. And at that point, as we're in here somewhere, I'm saying there's only 2 things on the radar right now. We're theorizing that this is going to be the wave 2, our bounce, and maybe we can get short in here. But that requires that this wave, this level, 17,730, 735 holds. Again, long story short, it did not hold. The market kept rallying. So once we didn't see that happen, just zoom out. We're still looking for the next trade. Let's zoom out and revisit the larger time frame. Always keeping context and focus. So we see a lot of squiggles on our 5-minute charts, but when you look at where we are here, you can really only count that as 3 waves down. So as we were keeping ourselves aware of the possibility that we weren't trading a reversal, we're just trading a correction. So it's good that we took what we got out of it and then got out of the way of it, because the market kept rallying. Let's see, should I go into some of the detail here? Yeah, to let Elliott Wave rules guide you. Now, what I was pointing out here, up until this point, you can see that this wave 4 was being counted this way as setting up for an ending diagonal. The problem with that, not only is it not that textbook, the problem with this is that because wave 1, as you can see, is longer than wave 3, and the actual numbers where this is an 8.9% rally, that meant in order for this whole ending diagonal or whatever diagonal count you want to name it, because wave 3 was at 8.9%, it meant that in order for this to remain valid, this rally for wave 5 had to stay under 8.9%. It may have been 9.2. I will look at the chat. Otherwise, if this kept rallying beyond the length in percentage terms of wave 3, this would require a recount to reorient where we were looking for the top of this wave 3. Again, keeping the most central rule of Elliott Wave analysis. I think most analysts would agree that wave 3 can never be the shortest of the 3 waves, 1, 3, and 5. Keep that in front of your mind.
Stephen, not to interrupt, yes, but I'm interrupting. You only have 20 minutes left to get to live analysis, just to give you a little timer. Okay.
Well, okay. Well, since this is happening right now, we're kind of in the live analysis. What we're talking about here is the question here is are we at the top of a major rally? And given that what Nasdaq is down a 1.5 today, or percentage point and a half, we're getting there. Thanks for the reminder. Let's see. Where were we? Back down here, and back up. So we're almost at the bottom of this. At this point, QQQ has made a new high. And I'll ask Floor and or Jody, do we have any questions? I just want to make sure if we do have questions, it should be forward. If we do have questions, I want to leave time at the end for them. Can somebody give me a cue? Okay, so now that it's time to look back up. As I said, that wave 5 got higher than it could have to keep that count valid. My friend chimes in, recount. I said, yep, but I tend to be focusing on the last 5 up. So at this point, we're looking at a 15-minute chart here. And we're seeing that we're getting a continuation back up. I used one of the features in WaveBasis, project pattern forward, to get a sense of where this last 5, with question mark, last 5 might end. And I sent him this chart. And you can see that this projects to about the 18,000 area. I told him, he said, just sitting back, waiting for the next setup. We'll talk through all of these little details. Yeah. Okay. So then I guess some little time went by and I gave him a little bit more specific view of how I was seeing that end of the move play out. We were looking at I was looking for something like that. And some other comments. And as that played out, these are days that are going by. Let's take a look at that. At a certain point, we were filling out the pattern that I had projected. So here I'm looking for a drop and an ending push. And at that point, this is on Friday, the day here, yeah, Friday morning, this past Friday. I told him at that point, based on those projections of the chart we just looked at, that I like 18,125. And that's a game, sort of a game that we've always played. It's called name the bottom tick or name the top tick. But again, it's always a good time to, at this point, I was responding to him. He was confused about the larger time frame wave count. He hadn't kept the count in his mind. And so I sort of reminded him, we're overstretched for orange wave 3, but typical for a subdivided wave 3, in the zone for white wave 5, and at the top of the white channel. So I was fussing at him a little bit. So again, what we're looking for, just like before, we're looking for confirmation that the wave 3 is done. You get that by waiting for 5 down, three-wave bounce on a 5+ minute chart. And again, this is into yesterday. Let's put this, was sort of tracking this down to the minute. And if we can, do I have that chart here? Let's look at that again. Did I show the last chart? Let's see. Maybe I can dig the last chart out. This is the chart I wanted to show, where I sort of circled where I thought we would be done, and it was I told him I still liked 18,125. Well, what we got at that point was the strong reversal that we're still in the strong reaction, I should say, that we're in the middle of now. And he called out 120.150 was pretty close to my 125. So this was, so far, neither one of us traded this. This is, catching a falling knife or catching a flying knife. But what the last chart I sent him yesterday is still holding as the sort of the expectation that we should have now. And it's just say here, rinse, repeat. This is back to the beginning. We're looking for the same thing. We've got a strong one, looks like 1, 2, 3 into a bounce. We're looking for it to finish a wave 5, bounce up and go again. Now, if we look, we go to get on a live chart here. Where are we? It's too low. And we can look at the drops so far today. This is the chart I sent him yesterday. This is around the close yesterday that we were looking for 4 to finish, drop into 5 and bounce again. The problem here, unfortunately, is that you got a really shallow wave 2. We would have expected wave 2 to get up in here. So this didn't, this happened after the close. So after the regular session closed. So what we would think, so that based on where we are now, is that we're going to drop down to a 5 here and bounce for wave 2. But we'll see, it's still very early. I want to zoom out a little bit and look at the longer term chart again to see where we are. Well, we're right at the top of that channel with a new and more solid count for an ending diagonal. Still above, as I talked about earlier, still a little above the expectation for the wave 5 from here. And if we look at RSI and MACD, the lines aren't drawn on here. I have them drawn on another line. We have divergence in both RSI and MACD. We have price making new highs here, here, and here, but RSI and MACD not making new highs on a daily chart. And that's obviously very solid information that a reversal could be imminent. Now, even though we got this big drop today, and any shorts are really excited, and it looks like there's a lot going on here. Ooh, that looks like a huge move. When you zoom out, it's not time to celebrate yet, because this can still reverse higher. We still need a little bit more proof on the downside before we start looking forward to, get back over here. Before we start looking forward to what's next. So let's say this is the top of this wave 3. What we'd expect is a drop down to the 15,000 area. That might even be a little conservative, given that we are in the territory of the prior wave 3 and 4. But more typically, wave 4s tend to get down closer to the prior wave 4. So we might be looking at a deeper correction here once we can confirm it's happening. So let's look at, I wanted to talk through why this count, why, and one of the things I always like to make sure that people understand is that you should be comparing counts, especially when there are alternate interpretations. And there's a particular approach to assessing and comparing wave counts. As I said at the beginning, this is a very an extended wave 3 all the way out to the 3.618 fib, that is not unusual to get to the 3 or even the 4.618 when a wave 3 has subdivided. And we can see here we have the subdivision of this impulse, nice, clean, strong impulse, and that impulse itself subdivided. Now, how do the probabilities work here? What you will typically see, or what you would, and what you like to see, is an inner wave 3 on a wave 3 that is subdivided twice that hits exactly where we would have expected it to. That will naturally have the effect of expanding the higher degree wave 3, typically between the 1.618 and the 200. The 200 often has a magnet on, and we can see that that's what we got up there. In case you can see it, we were up here in the 1.618 to 200 area. That expansion compounds to the outer degree, so that the next area to look for a wave 3 on a wave 3 that has subdivided twice like this is around the 3.618 to 4.618. So this is really a textbook example of a wave 3 unfolding. Now you might ask, well, where did I get that wave count from? Well, let's pop over to here. Let's wipe the slate clean. And let's see what WaveBasis thinks. That's the count. Just that simple to get solid wave counts. And it's a significant, it's a move to pay attention to. So what we want to see here is some sort of 5 down and a bounce, if you're interested in getting short this move or covering a long position or something like that. Do we have any questions, or should I just keep talking? Anybody? Oh, let's see. I'm getting questions right here. Sorry, in my chat. Let's see. Somebody would like to see the NQ set up in higher time frame. Yep. Here we are. That's the higher time frame daily. Somebody's asked, which is a better entering at the end of wave 2 or entering at wave 1 breakout? Well, that really depends on your style of trading and your objectives. You know, I talk about this, actually, we talked about this on the blog. The trade-off that you're making by catching trying to trade the end of a wave 2 or just the very beginning of a wave 3 is that you will have less confidence because wave 3 hasn't been confirmed yet. But so if you're waiting for the wave 1 breakout, you're going to have higher confidence that you got the momentum there to let's actually maybe I should just do it right on the chart. So what the question is asking is, you know, if we zoom in a little bit on a wave 2 here, the question is asking, is it better to try to catch this point here so you'll get in early for this wave 3, or is it better to wait until we've got a breakout over the top of wave 1? And what I'm pointing out is the trade-off here. You get higher confidence here, but obviously you will have different risk parameters because you're getting in late on the move. So it really depends on not only your overall your personal comfort level, but what kind of trade are you looking for? Are you in for a short-term trade? If, for example, you're looking for a scalp or something very fast, getting in on the confirmation over wave 1 might do just fine. You'll catch some of the momentum, set a trailing stop, and you're out. If you're looking for something a little bit longer term and relaxed, you might try to catch the end of wave 2, end of wave 2, beginning of wave 3. So I hope that answered the question. Here's a question. Okay, great question. How does he utilize the alternate wave counts in the tool to make a decision? What if there are multiple alternate wave counts? Does that mean weaker setup? Not necessarily. So we can look at that here. What do the alternate wave counts tell us right now? Okay, here's a possibility. And this is a quite legitimate possibility. The alternate shows, rather than possibly topping in a wave 3, as in the count I just talked through, possibly we're topping in a wave 1. Now, how do we tell the difference? Well, as I talked through before, we look at the proportions in terms of probability of the internal structure, internal subwaves of the wave pattern. So let's look at the highest degree here. We've got a top out around the 2.618, and then where's the wave 5? Well, this is a pretty legitimate count, and an ending diagonal up here. This is actually a pretty tough call, to be honest. I happen to, strangely, I'd say, happen to like this count better for now, but time will tell. But the process that I use and that I recommend is to inspect the subwaves. You know, what's not great about this particular count, to be honest, is, you know, as Prechter would encourage, to look for the right look. For my taste, this, even though that wave 3 hit where we would have expected it to, it's kind of small in proportion. It's kind of small, and we don't have alternation compared to this wave, this 1-2 here. So I would, based on that, I would lean toward this one, that we're close or have topped in a wave 3 over this one. Hope that answered the question. And does it mean a weaker setup? Well, not necessarily. A lot of times, the alternate wave counts will agree in if not precise structure, will agree in terms of forecasts. So we have 3 or 4 different perspectives, but the forecasts are all quite similar. We're in a place where a short can make sense. Also, if on this one, we're not quite up to the top of that channel as cleanly and as poignantly as in the wave 3 count. Let's see. Well, weekly, monthly count. Let's see. How do you confirm the end of wave 4? So here's a question. How do you confirm the end of wave 4? Well, that's a great question, and we can.
I think for that you have to wait for my Wavy Tunnel Pro presentation, because that's what my whole presentation is about.
Is it?
Yeah.
Well,
Yeah.
Well, here's a great
Okay.
Let me give you a segue, Jody. Can I give you a segue?
Okay. Yeah.
And this touches on something that we all know. Zach talked about it. On a correction, we're looking for typically the size of wave C to equal the size of wave A. In this case, you get from this wave 3, we can see that we would have expected wave 4 to end in this area here. Then we have our wave ABC that tells us where A equals C. So this is one way to find the end of a wave 4. Let's see. James is here and asking if I'm a day trader. Wait, have we entered a corrective wave and have we entered a corrective wave in NQ? It's too soon to confirm that, but if we are entering a corrective wave, we've certainly started off the way you would hope and expect it to. We've started with a bang with this drop today. Let me scan through these other questions, see if there's anything else I can squeeze in quickly. Let's see. There's a couple questions in here that are better served. We have a lot of questions, it looks like. There's a couple questions in here that are better served by reaching out to us at tech support or customer support. We're always happy to get questions, especially questions along the lines of what I'm talking about here today: thought process, how to use the probabilities, how to use the patterns, and of course how to use the features of WaveBasis to your best advantage. Let's see, anything else I can jump in really quick? How do I know when wave 1 is confirmed? I think that's somebody I know. Well, you can use the same process that I just walked through with the Nasdaq, looking for the top of wave 3. What you're going to be looking for are the wave patterns at smaller degrees as you approach expected wave topping points, and you determine those wave topping points by looking at the projections. When price is already above the high probability zone, you can say that it has a statistical magnet on it. It's not going to go forever. It's already getting pulled by this high probability here. So we're already getting into lower probability regions. So you can say that it has a little bit of rubber band on it. And again, you can use this same tool, same features that I'm using for wave 3 to look for the top of wave 1. Are we near the top of Elliott's channel? It's beautiful, and can't really describe this any other way than beautiful in textbook. So I think that's my time. If there are any outstanding questions, I always say write to us at support. We love to hear from folks, and we love to help. So I hope this was useful and not too long and drawn out. And thanks for everybody. Thanks everybody who came.
Right. Thanks, Stephen. And as it happens, I'm on next, and I'm going to be showing all of my examples using WaveBasis charts. The wave counts.
I'd love to hear that. You know that, Jody.
Yes, but I'm also going to show my indicators, which you need to put on your charts, and you'll see why if you stick around and watch. Okay.
We keep saying it. Let's get married, Jody. Let's get married.
Okay. All right. Thanks a lot, Stephen. I'm already married.
All right.
Okay. So I'm going to. And I know what you mean. I'm going to end the recording now. Thank you so much. Okay.
Okay. Thank you.